Hello friends, welcome to my channel. In this video, we are going to talk about Jubilant Foodworks, which has fallen nearly 50% from its 52-week high. This has caused a panic in the market and investors are quite confused as to what they should do with their existing holdings. So to help you all and present my point of view, I have decided to create a video on this. So in this video, we'll discuss what has happened, why it has happened, what should investors do in this kind of a situation. If you're new to the channel, please do subscribe and hit the bell icon, and you can follow me on different social media handles as well. Don't forget to join our Telegram channel where we discuss daily market analysis and lots of exciting news and views. So all this began after declaration of Q3 results of FY22 by Jubilant Foodworks. The company decided not to report a particular metric in their investor presentation from here on, and they decided to replace that with something else which the investors community and especially the analyst community did not like. So from then the fall in the stock began, and this got further aggravated when their CEO, Mr. Pratik Pota, announced his resignation from the company. This came as a surprise because he already had renewed his appointment from April 22 to March 25. So it was not a planned exit, and that's why market took it as a surprise. Now, why is the role of this particular CEO so important in this company is because after he joined, the company's performance was taken to the next level. What are the different initiatives Mr. Pratik Pota has taken? We'll discuss in the coming slides. So you'll get to know what was his contribution to the company. After leaving this company, he has decided to join Eureka Forbes International, which was demerged from Forbes & Company. And this company is bought by Advent International, which is a PE firm. So it is clear that the CEO has resigned and joining a new company for better job opportunities. Mr. Pratik Pota joined this company in April 2017, and from then he has been contributing in the company's growth. Another reason for the fall for the shares were the company recently decided to acquire stake in one of the master franchisee, which is DP Eurasia, which owned and operated franchise of Domino's in countries like Turkey, Russia, Azerbaijan and Georgia. So due to the Russian-Ukraine war, there was a crash in the stock market and the price of that particular company's share fell 60% from the price at which Jubilant Foodworks acquired that company. So because of this reason, their investment value also went down, and there is a risk that the company might have to write off a few portion of this in the future because of the accounting principles. So that might impact the P&L. So because of these three reasons, there was a combined fall in the share price of this company. Now let's talk about what are the initiatives of this CEO during his tenure. So he maintained pricing discipline. There were no absurd changes in the pricing during his tenure, which helped the company to have a sustained growth in their existing and new stores. He contributed in the form of offering different kinds of offers to the customers, which helped to foster the growth of the company. There were new streams of businesses, which were the company's own line of restaurants, which is Hong's Kitchen, which is a Chinese restaurant, as well as Ekdam Biryani, which is a step into the biryani segment, which were taken up as initiatives by Mr. Pratik Pota. So this is a very good contributing factor by opening new lines of service restaurants. Another contribution was during his tenure, the company took the master franchisee for Popeye's restaurant, which is again competing the companies like KFC. The company focused a lot on technology, and there were huge increase in the amount of downloads of the company's own app and the number of orders which were coming into the company's own app during his tenure. So like this, there were major initiatives taken by him, and the growth of the company became faster during his tenure. Let's understand from this chart. Before he joined up to 2017, you can see that the same store sales growth, which is the growth which can be seen in the same amount of stores, excluding the newly opened stores, was in single digits. But from 2018, which is from FY18 after he joined, you can see that the same store sales growth year on year has increased to 13.9%, 16.4%. There was a small dip near the COVID times, but later again it picked up to close to 42%. So 42% is again on the lower base. But overall, you can clearly observe in the chart that post his joining as a CEO, the performance and the growth of the company drastically improved compared to the earlier times. So that is why his contribution to the company is considered as so important, and his resignation is given so much of importance that the share price has affected so much. Now, what is my view for this instance and on the company post all these incidences? My view is that the group is a very reputed group. They have been managing a lot of businesses in different sectors very efficiently over a period of so many decades, and their dependency on a single CEO should not be much. They have different systems which drive their businesses across different sectors, and they will continue to do so by appointing a new efficient CEO in his place. The long-term growth story, the new initiatives which the company has taken under the leadership of the old CEO will continue. The new team will take over those initiatives and will run to the efficiency and satisfaction of the shareholders. Although the company has been given very high valuations in the past, the stock was even given PE as high as 200 at point of time. So such kind of high valuations may not be possible going further unless the company shows the same amount of growth and efficiency under the new leadership. But it doesn't mean that the stock will be beaten down to a very low level and it will become a very low PE stock. It can range between somewhere between 50 to 100 unless the new performance comes up, and gradually the stock will get reasonably high valuations compared to earlier. What will be the few concerns other than the CEO exit which the company might face in the near future? One concern is because the inflation. Although the company operates in direct to customer segment, it is easy for them to pass on the cost, but the company may decide not to pass on the entire cost to the customers, and the margins might be slightly affected due to the inflationary pressure across the globe. The same store sales growth might be affected because the company is targeting a 20-minute delivery time now. Wherever the areas have 30 minutes delivery and a single store has been performing very well, the company is planning to split those stores into 2 instead of 1 and reduce the delivery time to 20 minutes. So this will increase the amount of business the company gets, but it will also increase the amount of fixed cost. So this will also impact margins a bit. And the same store sales growth metric which was earlier reported will not show much of growth with this new model of working. But the customer service will drastically improve when you're getting 20 minutes delivery, and the amount of orders which the company will receive will also increase. In the con calls which the management has discussed during Q3, they are quite confident that the new stores will break even within a period of 3 years from their opening. The market will keenly watch who is taking the new seat of the CEO who has exited, and if a very efficient person from very well-known brands is recruited, then the market will salute it by increasing the share price. If at all there is not a big brand behind the CEO whichever is joining new, but the CEO proves to be efficient and brings the growth and efficiency in the company, again the share price will try to get back to normal as earlier. As a sector, QSR is going to have good traction, especially post-COVID, where people have increased their habit of sitting at home and ordering. So the sector remains very good, and the sector tailwinds will help this company to grow faster. Compared to earlier other players in the same QSR space, this company has a very strong moat. They have higher margins compared to its peers, and the customers' confidence on Domino's is much higher when compared to the other brands in terms of the product and in terms of the service which they offer. So all these factors will contribute for stability of the company, and gradually the performance will come in line with the earlier estimates, which will help the share price to get back to normal. So this is my view from the perspective of business of this company mainly. And as existing investors, I don't find any reason for you to panic. When you see the stock getting bottomed out, which looks so already, you can start averaging your positions and continue to hold it. And I'm sure as the performance gets back to normal in the next couple of quarters or so, you will be able to take an exit or make some decent profits from the stocks which you are holding. So this is a small special situation case study for Jubilant Foodworks. I hope you like the video. If you like it, hit the like button. If you have a different view, please do share your view in the comments. Let's discuss about your view, and I'll love to clarify your doubts if you have about this stock. If you like the video, hit the like button and subscribe to the channel. If you have any such doubts about some other stocks also, please do comment. I will try to make some videos to help you come out of such situations. Thank you so much for watching this video and have a wonderful day.